down here where all of a sudden, underneath the power line, place where you couldn't do aerial application where, and Charlie, you'll be interested in this too. This is not an exaggeration. Yield maps are showing 50 to 60 bushel decline where it would appear fungicide didn't get applied. And then, what that does, Mike, is when you start looking at the yield maps on your other fields and you see that strip where it's 50 to 60, all of a sudden you go back to that applicator and say, hey, wait a second. Now look at this. You guys missed this strip, which is pretty easy to do, with aerial application, but we're going to hear a lot about that down south over the next month because it's pretty obvious when you look at that yield map what it was.
Yeah, never seen it so obvious, Brooks, ever in my career. So
yeah.
What percent of the acres were sprayed?
I would guess in Illinois, Charlie, probably 80% were sprayed. But here in McLean County, even where we sprayed, it's still mediocre corn. The disease has overwhelmed the fungicide. So 80% was sprayed. Probably about that 80%, probably 60% actually was sprayed. The amount of just the amount of misapplication that goes on aerially is incredible. So never seen the differences so widespread. We just don't need any windstorm too. This corn, even that was sprayed, is hanging on by a thread as far as stalk quality too.
Yeah, we've got a little patch, Mike. We do fungicide application. We got that odd patch that you really can't apply, and the tops have fallen out of it versus the other. There's still some green leaves on the other, and it just looks like it was planted the same day, same hybrid, everything the same, and it's just a world of difference this year.
And farmers are not only concerned about the 50 bushels of corn they lost, they also paid for fungicide they never got. So I was with one guy this morning, $300 an acre was lost due to he had 20 acres of an 80 that wasn't sprayed. A lot of money.
Christy, as you think about things to brainstorm, you don't want to kind of give away everything we're going to talk about here in a few minutes, but for our next meeting in October, when we have this third Thursday marketing meeting, I really think that it would behoove our listeners to talk a lot about fertilizer prices, maybe even look at the pros and cons of a lot of application in the fall. There's going to be a tremendous amount of prepay in a lot of parts of the country. And what I mean by that is you're going to have farmers that have some pretty solid revenue numbers for 21. At the end of the year, fertilizer is probably the go-to for the majority of farmers and a lot of fall application. I was looking at a DAP chart yesterday where DAP costs were nearly $700 a ton. And Charlie, I'm not for sure, that may have been a Gulf price. I think it was like $670 in the Gulf, which is going to be double what it was last year. It's going to be real interesting to see, whether farmers decide to apply. I think they will because it's just something that they do. But there may be some other places to spend that revenue at the end of the year this year that we may not have wanted to do that. And Sterling, something we can talk about is how dangerous is it to lock in, 50% of your non-land costs without having many sales on the books?
And something that I've got on my screen right now is a chart of natural gas. And natural gas prices have moved up since this is August 17th, so exactly a month. Natural gas prices are up 52%. And I could pull up some European charts. They're up over 150% there. So we know natural gas is a big factor in fertilizer prices. Are we just experiencing a flare-up here, or are we going to be looking at extended natural gas prices above $5? And if that's the case, those prices are going to start translating back in the fertilizer market here shortly, because this run-up is really fairly recent.
Yeah, it's all of a sudden, you start looking at some deferred numbers, and of course yield is the big revenue changer on here. But you start backing down to an APH, and you start looking at the prices that we could look forward to next year. And hopefully Charlie will tell us some great things about demand here shortly on exports. That's Sterling. Hopefully Charlie's got more than a 2.3 billion bushel export on corn. I know we've been talking about that a lot in our WASDE meetings and our webinar Wednesdays. So Charlie, no pressure, but if you can order up like 2.7 billion bushels of export corn, we would be pretty tickled with that today.
Well, Brooks, go ahead, Charlie.
I've been in this business for about 38 years, and I've put a lot of orders in, and I never got one hit yet. So no one listens to me.
My headline for today's export report is corn sales slump, and they were below even the bottom of the most bearish expectation this week. Now, we didn't have China in there, and there may be some pensiveness here, looking for lower prices, because we actually, the period of this export sales, we had comparatively low corn prices, and it did not entice buyers very much or at all.
Well, Christy, it looks like it's about that time. Would you like to formally kick us off?
Yes. Are you seeing my screen?
Not quite yet, but it looks like you're starting to share content on my end.
Mhm.
Right. Let me see it.
There you go.
All right. Very good. All right. Well, we do want to welcome everyone to the third Thursday marketing meeting. This is the October report. We are delighted to have you here with us today. With us today, we have a special guest, Charlie Laird. He is with CGB, and I will pull that screen up here real quick if it will show up. Hopefully things are going slowly. So sorry. But we are delighted to have Charlie with us today. He is with CGB. He is he's the director of Origination with Consolidated Grain and Barge. He is going to share some insights regarding what's going on with the Gulf. We also have our standard wonderful people who provide you all the analysis and commentary you need with Brooks York, who is the Director of Producer Services. We also have Sterling Smith, who is the Director of Ag Research, and we have Mike Toohill, who is our Corporate Agronomist. So with all of that, I want to go ahead and pass it off, Brooks, to you, if I can get the screen to go. I'm so sorry. It's so
Perfect.
There you go.
Perfect. I tell you what, we're tickled to have Charlie with us, and I put Charlie on the spot, but the Gulf has been in the headlines, and Charlie is located out of Mandeville, Louisiana. So, Charlie, from most of the export activity, what are you, an hour and 15 minutes away from where a lot of the grain loads out on the Mississippi?
Yeah, we're anywhere from 45 minutes to an hour and a half as it extends up and down the river.
So we're going to look at a little map and Charlie asked you kind of where we're at. We've heard all kinds of reports out of the Gulf. I think there was some pretty negative stuff early on, and in some cases, some facilities have come back online a little quicker than what we thought. But we're still, I read yesterday, maybe at 25 to 30% capacity overall. And I'm gonna bring up some slides for us, Charlie, and we might illustrate a little bit of the situation. But the bottom line is in regards to the situation with Hurricane Ida, how it affects us on the farm. And, primarily it affects us on the farm in a negative basis manner. And so when we look at basis across the country, we're starting to see, I've got an illustration, maybe, if I can get it pulled up. Can you guys see my screen now? Got an illustration of just my back door. And I know there's a lot of viewers right now that live in this area. I know Autumn, Aaron is here, and a couple more. But Charlie, this thing looks like a crazy map. You see Illinois coming down through here. Here's the Ohio. Indiana sets here. And you see we've got all kinds of numbers. The green would be your top tier, the yellow, your middle tier, your red. If you set out here and you're pretty familiar with this area having managed, we'll pick on Lyle Station, Indiana, right here at 39 under. A farmer in Wabash County, Illinois, maybe Knox County, Indiana, that's not delivering down here to the river, they may think, well, the situation in the Gulf doesn't have much effect over me. I don't deliver to that market. That's probably some flawed thinking. And you having been in the cash markets for a long time, tell us how this river situation can not only affect, some rail delivery systems, but also ethanol plants out there.
Yeah, one of the things that I found out over the years, and I talk to new merchants all the time, is that basically the grain market is transportation. It's the cost of transportation, and it's one of the most transparent market that I've ever run across. So it's all about a demand in a certain spot and what it costs to get grain into that spot and the competition around it. With what happened with Ida, basically you eliminated one of the largest users, especially with this inverted market we had, where we have high demand going into the first quarter and the export side. It was one of the drivers as we started into this early harvest, and it needed to get the pipeline filled up to get the 50-some vessels that were sitting in the Gulf loaded. By basically, when Ida came in, it wiped out about 30 days worth of loading. So all those buyers basically ran and actually started selling bushels back into the ethanol markets and other places to take those bushels they had bought previously off their back. So basically we had a push back upstream of the supply, those early bushels that were coming off. And because of that, you were seeing your rail and your ethanol markets were buying bushels that they hadn't expected. And because of that, they had an effect on their basis demand.
So, Charlie, I'm going to cheat just a little bit here. The last week of August, we unloaded around 487 barges amongst the group of terminals that I'm going to show down there. And of course, that capacity picked up considerably in September. Now, give us a quick rundown of a barge. A barge will hold on average of how many metric tons and how many bushels? Break that down for us.
So you're going to end up being about 60,000 bushels, or somewhere around 1,700 tons in a barge. And basically what you're looking at is our facilities down here will unload anywhere from 20 to 45 barges a day is what their capacity is.
So 1 week shutdown in and we're not quite to the gut slot of harvest, but September, or first half of September was going to be relatively busy. Is it safe to say that we're 800 barges behind on unloads right now, or is there a number you could put on that?
I would say every bit of that at this point in time, because I think we had some folks that were staging early on. So yeah, fair assessment. You can see my screen here, and my illustration is SIF affecting ethanol. Charlie did a really good job of illustrating that, how all of a sudden your buyers become sellers, and so you're going into that ethanol market. I'm going to back up just a second to these basis levels across the country. Now, Charlie, it's kind of odd. These basis levels are a couple days old, but if you take a look at these red, you see better levels as you get up here into the interior. There's a lot that goes into this, and harvest timing has a lot to do with this too. So right now, I think if somebody said you were going to see 50-cent carries in the corn market throughout southern Illinois, southern Indiana 2 months ago, you said, oh, demand's so good, I don't think that's going to happen. All of a sudden, you've got it now. Tell us how carry and the ability to fill up space is going to impact bids, because it is odd that if you go up here, Shelbyville, east of Springfield, you're seeing some 5 over, 22 under. Harvest is just getting started up here in Mike's neck of the woods. Are these red numbers going to slowly creep north? Is this an opportunity to get some early basis locked in for farmers? So as a general rule, when you look at storage on the farm and storage in commercial hands, when you move basically St. Louis and north, you can basically hold about a crop and a half, and in some areas 2 crops. So there's a lot of space. The market needed those bushels, so we're coming into an empty storage situation. When you're St. Louis and south, that on-farm storage is a lot more reduced. Most guys can only handle about 50–60% of their crop. Same way on the commercial side. So a lot of times what you'll see is the South, those St. Louis and South buyers have to actually back to back. They're pushing bushels out as it comes in because they aren't able to store. Actually, their storage works as a surge tank. Now, once you go St. Louis and north, then they can almost put the whole crop away in some of those markets. So they'll actually bid below market values just to fill up their storage space. So eventually, yes, you'll see some of those red values move north, but normally you'll probably be 2 to 4 weeks into harvest, depending on how much harvest pressure there is, how quick it comes off before those northern locations get full. I hope that answered your question.
Yeah, it did. I'm going to get into some nerdy stuff here in a second on SIF and freight, because CGB's got a kind of a special niche in the freight market and how the company started, and kind of ask you to do that. But first, I know a lot of folks are kind of interested in, you know, what was affected in the Gulf, where are we at on capacities, how many days are we going to be before we're back open. I pulled a map open of the terminals, the primary terminals down there. I've kind of circled with a circle on reserve, kind of being in the center of it. It looked like where the river kind of runs east-west there was a considerable amount of damage. One facility in reserve, I think maybe down for 6 to 8 months, maybe. Other facility there not back on board. You guys have your facility in Convent, which is a little further upriver. I guess tell us what happened to Convent, and then tell us what happened in general to these terminals down there.
So Convent, got knocked out when Ida came through. We didn't take any damage to the facility per se, and it was functional within a couple, 3 days after Ida came through, but there was no power. And we don't have the generation power, or didn't have, on site. I mean, it's massive, the amount of electricity these facilities would take. So as of yet, Entergy does not have power up, nor does it have power up to most of those facilities at this point in time. Convent, when they started seeing the issue, went out and leased generation powers. They have 18 generators that are housed. Each generator is housed in a semi-trailer. And that's what the capacity they needed to be able to get up and going and actually start operations again. And they started operations, I guess, Monday of this week, and we're loading vessels as we speak. I think as of yesterday, we were one of 3 facilities that were actually operational. The only facility that did not go down, that did not take damage, or was still had power, would have been the LDC's facility at Baton Rouge, basically.
So 25 to 33% capacity amongst all these facilities. Is that a correct estimate?
I'd say 17 to 22 to be a little bit more exact, but yes.
Okay, perfect. So what do you anticipate? Do you see us getting, I know that Cargill at reserve, I mean, they came out yesterday and said, they confirmed the extensive damage. They're offline for a while. Do you see us getting back online in most of these places in the next week or two?
I think we'll have 60% of the capacity up. And again, this is my guesstimate, within the next week to 10 days. I think that 30+% of the capacity could be down for a month. The Cargill facility probably represents somewhere between 15 and 20% of the capacity, and it'll be down for 6 months. Now, we do have some midstream capacity that is out there. We've got a facility that's coming online as well that'll add some new capacity midstream that might be able to take some of the edge. But we have definitely, in this first quarter, taken a significant amount of the export capacity, loading capacity out of the equation.
So Charlie, I'm gonna have you give. I'm pretty familiar with operations down there, and I know what midstream is. Tell our viewers exactly what a midstream operation is.
Basically, it's a huge rig that has the where cranes will come up alongside it. We call it midstream because it's basically conveyors that are situated on a barge, and it's basically in the middle of the river. They bring barges to it. They use a crane, bring bushels, and swing it onto a hopper. The hopper elevates, weighs, and grades, and then goes to a vessel. So rather than a land-based facility, this facility would be sitting in the middle of the river. There's probably about 3 or 4 of them in operations that are significant enough. Most of them historically are used more for byproducts, and they'll do the dirty stuff that no one else wants to do at the facility, like DDGs or soybean meal. But we're going to see grain barges with what's happening now that are going to be off or be discharged at the midstreams.
So, Charlie, we've talked a lot about facilities being down. We really haven't concentrated on damage to vessels. I see a picture on my screen here, and you'll see these covered hoppers is what we call them. These are fiberglass lids, essentially, that are on barges. There was a lot of those lost due to wind, and I think about last count I heard was around 70 barges that were sunk, and that all sounds pretty extensive. Drop in the bucket compared to where we were at in 2005 with Katrina as far as lost barges and things like that. So it's more about getting those barges emptied, getting the ones waiting unloaded than it is about losing barges. So to kind of give you an idea, Charlie, you and I talked about this as far as our covered hopper fleet. Would you say about 13,500 is what stays in operation?
Yeah, that would be a correct number.
And then, so the important part of this, and this kind of illustrates our mess, is as they stack up in the Gulf, it's important to get them unloaded. Give me an annual life cycle of a barge. How many times? And this is kind of a crazy question because we've got destinations all over the place where they can go. But how many round trips do these barges need to make on average from where they're going in the Midwest and the North and the East back down to the Gulf? Is there kind of a number you shoot for there?
Yeah, normally you're looking at 7 turns per year, so that's up and back.
So as they sit there for even 1 week and 2 weeks, it really disrupts logistics. And
you know, the way we're headed, we could take one of those turns out. So there's a good chance that, you know, those 13,500 barges, depending on what happens here within the next 30 or 60 days, we could take 1 full turn out of the fleet.
So, you know, we say that and we think, well, that's just an inconvenience. Well, the issue is timing and where the bushels are available on the globe. Yesterday morning, we woke up to news of a Chinese cancellation. It was a little scary initially because, you know, we're seeing a little economic downturn in some of the Asian countries, and we're thinking, oh my goodness, they're canceling soybean purchases. They really weren't canceling soybean purchases. They were just canceling United States soybean purchases due to logistics, which kind of illustrates a further problem here down the road. This one trip out of the cycle that could be missing can cause China to look elsewhere. Do you want to talk about that for a second?
Yeah, so transportation is actually a trading market, very fluid. So, you know, when we came in, and I think you've got a slide a little bit later, basically we increased the cost of moving a bushel from the Midwest to the Gulf about almost doubled it in some situations.
Yeah.
So, you know, the cost of transportation goes skyrocketing. And the other thing that we don't factor in is grain's not the only thing that's out there. We've got vessels that are backed up on this northbound move. So you've got steel, you've got other type of bulk products that were the northbound leg of the grain side. So, these products go north, and the barge companies get a return on that, and then come back down south. So it's a two-sided type move. And the cost of that northbound, as you don't have barges, basically the barge companies are having to allocate them out to customers that they already had sold, or the cost of that transportation, it just goes skyrocketing. Because of that, we've got a hole that's going to develop here in about 3 to 4 weeks, and that's what I talked about when I said that we're going to lose a turn, where barges aren't going to be made empty, and as grain, very possible as grain hits a critical stage with where the weather's at here in about 3 or 4 weeks, we could be in a situation where the availability of barges, they just don't exist.
So, I'm going to transition down to some nerdy stuff. We talked about kind of the qualitative part of it. It's a mess, right? We got a problem down there. Let's quantify this, because a lot of people don't realize this, that freight trades like a commodity. And I threw an acronym up there, and we're guilty of talking about these things, assuming other people know exactly what they were. I threw SIF up there in that previous slide, if you see SIF, and basically that's representative of the Gulf and a basis level of value in the Gulf. Charlie, give us a transportation 101. When I say SIF NOLA, what does that mean?
That means the product has been loaded in a barge, and the shipper is guaranteeing transit to the Gulf in like time and commodity, so in good shape, and that it's ensured that it's going to arrive in the quality that you're representing.
So a value, when we say SIF NOLA, a value trades down there just like a basis would at any interior facility. I pulled these last week. Okay, so this is actually one of the good pieces of news through this. Is something you and I have talked about, that overall demand has not diminished because of the hurricane. So last week we saw buyers and sellers, which are represented by this illustration with the bid and offer, and they were 15 cents apart. Now, why in the world were buyers and sellers 15 cents apart? And really, things haven't tailed off too much. Talk about how maybe buyers and sellers got back together over the next week, and the fact that these numbers, the value of the corn in the Gulf, hasn't really fallen due to the hurricane.
Yeah, so the big thing is the unknown. So when you took a snapshot of these values, basically the Gulf had no idea, or were guessing when they were going to get their capacity back online. So you've got 50 boats that are sitting out there to be loaded. You've already got a pipeline of supply to come down. So for someone to buy additional bushels, they have to get comfortable with the idea that, if those barges come down and they sit in a fleet, and you're going to be paying demurrage on them for however long they sit, you've got to be willing to price that into your equation. So you've got one side where there's a reluctant buyer because they don't know how they're going to be able to load out. Then the offer side is that you've got these interior locations that are competing against the ethanol and the rail side, and they're not going to be willing to sell at below market values in their local area. So you've got an unknown buyer that's trying to figure out when he's going to be able to actually execute on his product, and you've got an interior seller that's trying to figure out where he's competitive at.
Is above or below, depending on where we're trading. The Chicago Board of Trade, things have been much above for a long time. So in this illustration, I split 40 and 50, where you had a buyer and a seller at 47.5. Kind of gives you the value of that bushel in the Gulf. Whenever I was using 5/12 futures, things are higher today, but kind of gives you an idea. Now, what's really been affected here, Charlie, is freight. And I gave a little history on this. CGB's got a rich history in the freight trade over the years. Matter of fact, kind of the originals in that. Tell us a little bit about how freight operates, because this is truly what's affecting what farmers bring home.
So back in the 60s, they established the St. Louis Freight Exchange Board, and basically what it did is it went out and set tariff rate bases for different locations up and down the river. So here's a slide of what those are. So, $6.19 is the tariff rate into the Twin Cities. Into St. Louis is $3.99. So you can see as you go further north, that tariff rate gets higher. Over the years, what we've done is that's the base point, and then it's traded in a percent of. So we're historically, we would be trading anywhere from 325% to 750%. And I think on a year on average, we're somewhere just shy of 400 on average. Each one of those percents, using St. Louis as a barometer, is about 12 cents a bushel. So factor in if you're trading freight at 300%, and then you have an unknown happens and all of a sudden it spikes up to 500%, you just added 24 cents a bushel to the cost of getting it from St. Louis to the Gulf. And basically that's what we saw when Ida hit, is immediately we saw prices go up anywhere from 200 to 300%. And basically we pretty well stabilized there. So our cost of transportation now to get corn or beans from St. Louis to the Gulf has gone up somewhere in the neighborhood of 20 to 30 cents a bushel, more than what it was pre-Ida.
Charlie, in this illustration, I'm using 525. I think maybe yesterday there was a 575 trade in that St. Louis market. Does that sound about right?
Yes, and we're going to probably, as I said, our pain point is probably about 3 weeks out. So there's a pretty good chance that we're going to continue, if the weather stays nice and harvest proceeds at an orderly fashion, that we're going to see that number in the 700, 800, 900% levels.
So everybody needs to be all ears on this. And Charlie, one thing we've done over the last 3 weeks, we put a DMO out a few nights a week, and that's just kind of a daily market outlook. We started talking about basis 4 weeks ago. And naturally, I think I'm the guy that caused all the damage in the Gulf, because I was a really bullish basis. We went over all the demand points. I felt pretty good about things. Looked like some pretty strong numbers for fall. Hurricane Ida comes along. We changed our tune in that DMO. And we talked about maybe one of these situations where we have some aggressive bidding early on. And then all of a sudden, with our freight situation, I think we've got to look for a dip here over the next 2 to 3 weeks. And it's going to be one of those things. I don't have enough basis set. I don't have enough basis set. I guess I do have an opinion that by the tail end of harvest, I'm talking about the last 5% of harvest, we see basis levels get a little bit stronger, just because commercials want to fill up every bit of that space. They want to make sure that everything's full. Any tips you can give us on basis over the next 3 to 4 weeks? And I know it's different in every part of the country, but for right now, I guess I'm gonna put you on the spot for anything that could be impacted by the SIF trade. So we're looking at anything along the river systems that depend on SIF to derive values. Any tips you can give us on setting basis?
Well, I think they're going to be very volatile. So, I think, you could see some 10 to 20 cent swings in a week. And again, it's just going to be on whether there's barges available, whether your local market has space, where they are on the percent. So one, if you've got to move stuff and, you're looking at basis levels currently and you're like, oh, can it get worse? Yeah, it can get worse. but that's going to be, again, predicated on what Mother Nature does. If we hit a rain spell in here in about 10 days to 2 weeks, and we shut down harvest for 3 or 4 days or a week, that allows the cycle to catch up and allows the ethanol guys to squeeze a few more or crush a little bit more, and it takes some of that harvest time pressure off of it. So it's going to be volatile. Ultimately, basis levels will stabilize. There's still demand behind this thing. I think, as you get into that last little bit of harvest, I agree. I think basis levels will firm up. And I think once the crop is put to bed, I think the farmers will stop selling and basis levels will whip back really, really quick. This next 30 days is going to be the pain point for the Gulf. The Gulf is going to have an export program, and they're going to have those vessel demands post-harvest, and they're going to need to come in and buy. So I'm not bearish demand. I think it's out there. Have we hurt demand on the S&D line? Yes. I think that we've taken 150 to 200 million bushels in Q1 out of the corn demand cycle because of what's happened in the Gulf. We've probably taken anywhere from 70 to 100 million bushels of beans out of the export cycle. Are those lost forever? Will China come back in and pick those purchases up later? It's going to be solely predicated on South America. So what this event has delayed the Chinese need to respond, and it's allowed the South American market to become a player on replacing those lost Q1 bushels.
Well, Charlie, you did a really good job transitioning to the later part of the meeting as we're going to talk about weather and its impact on basis and harvest and also overall demand. I know Sterling wants to talk a little bit about that. We got a pretty good audience out there. This is your chance to give Charlie any questions. Charlie, if you can hang on for just a couple of minutes, we'll see if any questions come in. Christy, if you're still with us, I think with the transition Charlie gave us into weather, it might be good to put Mike on the spot here. And I've asked Mike not only to talk about domestic weather, but also maybe where we're at in South America at the beginning stages of planting. Any questions for Charlie? Christy, anything come across yet?
We haven't had anything come in yet.
Well,
go ahead and put those in, guys. We'll be happy to answer those as soon as we can.
Well, awesome insight into basis. And I think the good thing is long term, we may have a bump in the road here over the next 4 weeks, but long term, there's some optimism there, which I share as well. Mike, it looks like you are taking control of the screen. Charlie, if we get anything that comes across, I know you've got a busy day. I'll shoot you a text, and we'll make sure you can fire back an answer. But I appreciate you coming on and taking some time for us today.
Thank you very much, and I hope everyone have a good season. Take care.
Good to see you, Charlie. Thank you for joining us.
Bye.
You gonna be able to run the slides for me, Christy, or? Okay, thank you. Perfect. We're going to talk just a little bit today about some of the situations here. I guess number one, we want to talk about the latest government report, and also kind of looking at that east of the Mississippi corn and soybean crops. Are they as big as what NASS and USDA thinks? I think we got a better handle of this week. Here in McLean County, quite a few farmers were able to get into the cornfields this week, and although crops are good, probably been more farmers disappointed than happy with their crops. Go ahead, Chris, you get the next slide for me. Here's the numbers we're looking at. Right now, in the September crop report, Illinois came in at a record 214 bushels an acre. For reference, our previous record was 210 set back in 2018. Indiana is also projected to have a very good crop at almost 200 at 197. Ohio 190, Kentucky 185, and Wisconsin 172. So today we're going to kind of focus on where the crops are good. We kind of talked about the droughty areas all summer, so we're going to kind of focus on whether or not those big crops in the east are going to make up for some of the problems in the west. Go ahead, Chrissy. We'll talk about bean yields next. Right now, the Illinois bean yield from the September report is projected at a record 64. Indiana also has a nice crop coming in at 60, Ohio 58, Kentucky 55, and Wisconsin 49. So some pretty big bean yields in that part of the world. Go ahead, Chrissy. Next slide, please. I did want to talk about that eastern crop and why I have some concerns with it. Walking fields this summer, I thought pollination year set was excellent in the east. Couldn't ask for a nicer pollination weather. Most fields were having 30, 35,000, 14, 16, 18 row ears, 35, 38 long, which set to be a record crop. So despite the very high fungicide utilization, I would assume Illinois probably had 80% of its acres sprayed. Starting about the 15th day of August, our corn started to die, and most of that corn died about 2 weeks to a month early. So again, very big crop, very high sink demand in this corn, very high yield projections, but I did not get the finish I was looking for. Go ahead, Chrissy, next slide, please. Kind of ranking what I'm seeing in Illinois, not much talk about this one, but anthracnose is the #1 disease in my opinion. There's 3 different forms of anthracnose. There is a leaf blight that came in June and July with the rain. Then we had the top dieback in August, and now we've got the stalk rot component. Also a lot of southern rust in the Corn Belt, and probably the one everybody's talking about is tar spot. Tar spot is likely the #1 disease in Wisconsin, northern Illinois, northern Indiana, and it's also present in central Illinois. But I think tar spot is probably more of a conversation piece. I think some of the other diseases in combination probably hurt yield just as much as tar spot. Also seeing some gray leaf spot, northern corn leaf blight, also some causes bacterial wilt. So as you can see, I've got a pretty big bucket list of diseases in the fields. And in most cornfields, you can still find the disease presence. Go ahead, Chrissy, next slide, please. So now we're going to talk about this yield impacts of premature death. According to Purdue, we lose 12% of our yield whenever corn dies at a 50% milk or starch line. So if a grower was thinking he had 250, corn died 50% milk line, that yield drops down to a 220. 225 becomes 198, and that goes continues to work on down. So again, that's why we're seeing some disappointment. We've also got some other issues, not just east of the Mississippi. We had some September rains and late August rains that caused more damage in some of the dry areas. And one thing we're seeing around all of corn country, more and more issues with wind. The picture there on the right is from Tazewell County. That grower had a hybrid on the outside that was standing pretty good. He jumped into the combine, and look what he saw in the middle of the fields. And looking at some of the drone images, I think wind is underestimated as a factor that's working against our crop yields. Go ahead, Christy. What's it look like for the foreseeable future? I've got here the 6 to 10 and 8 to 10, 14-day outlooks. And what we're seeing is a lot of heat in the Midwest. That's usually a good thing. Most of the crop has either died early or has matured. But one thing I'm concerned about is this corn crop drying a little bit too rapidly. Not only does it sometimes take a little bit of yield away from a hit and loss standpoint, we can also, believe it or not, in a couple of weeks, in at least central and northern Illinois, it's possible to have some fields that will be coming in below 15%. Next slide, Christy. I want to talk about that hidden loss or mystery loss. That seems to show up when corn dries a half point per day to up to a point a day. We get numerous hot days in a row seem to magnify this loss, and this occurs even when visual field loss is minimal. Kind of my thoughts are, if this corn crop dries as fast as I think it's going to dry throughout most of the corn belt, there's probably 5 to 10% of our bushels that aren't going to be showing up on the settlement sheets, and that's also if we have to add in some of the loss or more head loss too. So again, some things working against us on it. Talked to a couple of my northern Illinois buddies this morning, corn on corn. The roots have already given out because the root worms have taken the roots out. But one thing that's going to get tougher and tougher as corn dries, the stalk dries out and the roots give up, that down corn becomes harder and harder to attempt. And another comment too, going back to disease, a lot of stalk rots in this corn, a lot of these fields that have been maybe a little disappointing to the grower, yielding 180, 210, 220. We're just a 40 to 50 mile an hour wind away from having more fields look like that. So I think farmers are going to be tackling this corn pretty rapidly. Go ahead, Christy, next slide. Did want to talk about soybeans here a little bit. I think the market feels pretty comfortable with our beans here in the U.S. Did get some pretty good late August rain, but I want to look at this map here. This shows 30-day deficits as of August 19th. All the yellows are short 1 inch of rain. Some of the tans are 2 inches short, oranges 3, and the reds are 4. So looking at the U.S. as of August 19th, we were very short on moisture. Now that moisture deficit did get relieved after August 19th, but my question is, I wonder if some of our yields weren't affected because of lack of August rain, although we did get rain on the backside. And one thing too, with most of the bean crop being planted a little bit earlier, I think it also moves up our water requirements. So again, market feels pretty good about our bean crop, feels we had enough August rain, but my question is how much of that rain came on the backside of August into early September? Go ahead, next slide, Christy. I've also got some areas that still never got much rain in the last 30 days. Looking at this map, this is our current 30-day deficit. And looking at this map, most of southern Iowa was short an inch or 2 of rain, northern Missouri, northern central, western Illinois, southern Wisconsin, northern Indiana. So again, market feels very comfortable with the U.S. beans. The September report was raised. But my question is, I wonder how much of those bushels have we maybe lost on the back end, because not all areas of the U.S. had very good September rains. And my last slide, Christy, if you get that for me. Any questions for me? And again, one comment on soybeans. Whenever I'm driving around Illinois, Indiana, wherever I'm at, Iowa, I think our best yields come on our soybean fields where those fields turn very uniform. You get those nice, pretty oranges and bright yellows. And this year, what I'm seeing where we had a lack of August and September rains, the beans look more blotchy. Maybe the high ground died first, maybe the low ground from water stress died first. You've got some green patches, brown patches. Again, not a disaster by any means, but I just wonder when the guys start to harvest what those yields are going to look like whenever we have some of those blotchier soybeans. So yes, to kind of summarize how I think about the Eastern crop, I think it is a good crop. Been talking all summer. I don't think it's a record crop. We didn't really talk much about existing water damage, but because of the late season disease, I think our yields are going to be trimmed. Just look at Illinois, for example. Let's say Illinois planted 10 million acres of corn. We're off 10 bushels because of some of the late disease and the early dry down. That's 100 million bushels of corn off the balance sheet. So again, something to be concerned about. And looking at the markets a little bit, that's not my area of expertise, but kind of on Monday, more and more of the Twitters and Ag Talks were talking about disappointment yields, and we got a little bit of a pop on the corn price. I really have not heard enough soybean yields to know yet, but we'll kind of learn a lot more here as we move into the future. So that's kind of what I'm seeing out there, especially in the Eastern Belt. In the Western Belt, been a lot of low yields as expected, but probably not any lower than expected.
Yeah, when I was out yesterday looking at crops here in eastern Nebraska, I saw incredible variability in soybeans. I saw some fields that were completely green, some that were half yellow and half green, some with the leaves already dropped, and some had all three going on in the same field, which it all struck me as, one, it seems a little early to see leaves drop. So obviously we had beans that went in early, and just the amount of variability I saw. And this was true for some dry fields that I look at and some irrigated fields. So again, we're probably going to see more variability in yields, and maybe we won't see those bean yields always seem to get fat at harvest. Maybe this year they're not going to get quite as fat as they sometimes do.
Yeah, good observation, Sterling. I'll never can guess a bean field until they run the combine across, but I had the same concerns. Whenever these beans, I call them blotchy turns, it just doesn't look like we're going to get those super high record yields, although I could be wrong. We'll know here in a couple of weeks.
Yeah, Mike, I've got a question for you. We're experiencing some really, really high bean yields down in southern Indiana, southern Illinois. It's not uncommon. I mean, it's not uncommon to hear, that 90 to 100, maybe a smidgen even over 100 bushel per acre, which blows my mind. The beans are huge, okay, in size. The pods look like they're getting ready to bust. How does that play into? We're in a big area for seed production. The other thing I've noticed, it's kind of a two-part question. How does that big bean play for seed production? And the second one is, the beans are kind of ugly. The yields are awesome, but the beans they don't have a great color. It doesn't look like it's necessarily affected quality to me when you split the bean open, but the outside looks discolored. Why is that this year?
I would assume we had some late season, maybe some pod and leaf modeling, some late season disease affecting some of the beans as far as the color with the hilums bleeding and maybe some late stress. And the seed companies, Generally don't like the bigger beans. There could be some more germination potential problems with that too. And kind of addressing why the beans are so good in your area, Brooks, I think the benefit you had versus us here in central and northern Illinois, your early planted beans did not struggle as much as ours. A lot of our beans sat in the ground for 20, 30 days before they emerged. They never did grow right. And again, kind of going back to Sterling's comment and my comments, bean fields are very ununiform and just not turning correctly. So hopefully, I think, and you're going to have some of the better yields I would expect. And I think our yield will be more toward the mediocre side, but I could be proven wrong on that.
Well, very good. If you read my DMO last night, I had to use the it sounds like a pun, the corniest phrase ever. I talked about a cornucopia. And, my wife and I were talking about this, and I said, I don't believe a cornucopia ever had a use. I said, can you imagine carrying a basket around that looks like that, doing anything? So I researched it, and I promised never to use the word cornucopia again. She was pretty disappointed that, our forefathers didn't use them to bring in the crop. But we do have a lot of information out there. And Sterling, in our conversations over the last week, I think they've ranged from everything from private products that we could develop to help with basis. They've ranged from economic issues in Asia that are concerning our Gulf situation, South American weather. And so I think you could take us about 15 different directions of useful information. And you've got to do that now in about 20 minutes. So no pressure or anything. So I'll turn it over to you.
No problem. Well, the first chapter of the new story of what we're looking for, and if you look at our DMO, I added November 22 soybeans and December 22 corn. We need to start thinking about that right now. And the first thing we need to think about, what's going to be the big driver here, is how is South America going to perform? Now, we had some beneficial weather for prices in South America last year. Is that going to continue? That is the million-dollar question. Right now, soybean production is expected to be higher in Brazil. They're expecting 142 million tons, which would be, again, another record crop. We're also talking about corn production of 118 million tons, which would be somewhere around 20 to 25 million tons higher. Argentina has raised their production estimates for corn by 3 million. So if that comes to fruition, we're talking about 28 million tons of corn out of primary producers coming into the marketplace. China imported about 20 million tons of corn this year from the U.S. because that corn simply wasn't available. So how South American weather behaves is going to be a big determining price, especially when we're looking around the corner into next year. Now, it's very early in the planting period for South America. They are just getting started. Their primary planting periods for corn and soybeans are October, November, and December, but in some areas they are getting in the fields and they are going to work. So weather right now, this is a looking forward 10-day forecast. As you can see, the green areas are the much more moist areas. The blue areas tend to be a little bit dry. And if we can see here, the area we're really worried about, if you look at that top side, you see that big blotch of white. That's not what we're so much worried about. We're worried about areas to the west of that and to the south of that. And as you can see, precipitation is going to be limited. And Christy, if we move on to the next slide, this is what we're really concerned about. We're not concerned about how much rain falls. What we're concerned about is the deviation from normal in how much rain falls. And as you can see, the deviation from normal, that bright red area, indicates that we are seeing dry weather. And this is particularly true if we look in Paraguay and Uruguay, moving all the way down into the northern part of Argentina. So this crop is going in. There was already soil moisture concerns, but this crop is going into dry weather, and we're going to have to monitor this to see if it actually improves. Now, if we go on to the next slide, this is surface temperatures. And with like anything else, red is trouble. That means there's heat. So we're combining unusual dryness, and certainly over the next 10 days, we're looking at an unusual amount of heat. And if we move on to the next slide after this, this is the temperature anomaly. Now, that area of bright red is the area known as center-south in Brazil. This is where you grow corn. This is where you grow soybeans. This is where you grow sugarcane. And we definitely have some issues going on there. And if you look further to the north into prime production areas, we are looking at hotter than normal temperatures. Will this continue? Well, that's going to depend on weather patterns. And if we move on to the next slide, we'll take a little global look here. And this is the areas in the world that are having crop stress due to moisture. And particularly if we look down in South America, there's plenty of issues going on there, and we're seeing some issues moving along into Central Europe. Most of the United States actually looks pretty good, and there's not as many issues maybe in Northern Australia as we have expected. We're also seeing some issues going on in India, which nobody really ever thinks about India, the second largest country in the world. India has become a much more viable wheat producer, and they are also a big sugar producer, and how they behave can drive these prices. And there's a relationship between corn and sugar and high fructose corn syrup and an ethanol use. So trouble in sugar can sometimes bleed into problems, particularly if we think about Brazil, we think about how much they grow and how much they export. Brazil is becoming a massive food processor down there. Their own needs for corn and soybeans, they've actually had to import corn from Argentina to meet their needs. So again, it's a big global picture, and we're not starting off with weather that I would call exactly ideal. So let's move on to the next slide, please. This is a simple little chart of when they actually plant things and when they harvest them in Brazil. And as you can see, we're moving right into prime time for planting. We're starting right now. In Argentina, they've been planting corn for about a month, and so far their crop has gone in and there hasn't been a lot of issues. The second thing I want to point out here is for second crop corn that's in that top box in those two green items. That's January and February. That's when they plant their second crop corn in right behind their soybeans. And this can be a big fulcrum for the export market depending on how this crop performs. Now let's go ahead and move on to the next slide. There's all this talk about La Nina. La Nina is probably going to be in play, and we are probably looking at a La Nina condition moving forward for at least the next 4 months. This does not have as pronounced of an effect on the first planted crop. In fact, yield deviations are not even noticeable, and sometimes during La Nina, that first crop does very well. Where it becomes an issue, it becomes an issue with that second crop. So if we see this La Nina continue, and if we were to see it strengthen, for example, from the middle of October through the middle of November, most likely we would see that La Nina carry into January and February, and that would have an effect, a material effect on their corn production. So again, we're at a situation where we have a lot of moving parts. Christy, did I have one more slide?
Nope, that's the last one.
That's it. Okay, Christy, if you could hand me the ball, we're going to attempt to share my screen here, and there's a number of topics here that I'm going to talk about, and some of them are good, some of them are a little more troubling.
Okay, it's to you.
Okay. And let's see here if this works. And my screen goes dead with a moment of fear, and
You're good.
but are we seeing my screen? All right, very good. First thing I want to talk about, we touched on fertilizer prices earlier. This is a chart of natural gas futures. We have run up 52% in the last month. And this is important because this plays a role in fertilizer prices. What this is not a localized U.S. phenomena. This is not necessarily the Gulf. We have seen natural gas prices across Europe move up at an even higher rate. The United States is a huge exporter of liquefied natural gas. And if these companies find it profitable to send natural gas over to Europe or into Asia, they're going to do it. And what that's going to mean is that's going to mean natural gas prices are going to be unusually higher. Another thing we need to think about, we always think about natural gas as being, a wintertime item, and it is. It's also a summertime item. My one concern going in is that we may see there is a potential with La Nina and with U.S. weather patterns that we may see a cooler than drier than normal winter. And if we do that, we are going to see natural gas prices remain elevated and quite possibly move higher. This right now just looks like at least it's a temporary thing, but we could easily see that pricing range move up from where, if we look back here, we saw prices, between 3 and 3.5. We could move that band up noticeably to where maybe it trades between 5 and 6 or potentially higher, and we're not anywhere close to a record high price in natural gas. So if we see natural gas prices remain elevated, this is going to create some issues for fertilizer and may very well likely push prices up. So this is a concern that we have right now. And again, we'll see if prices come back, but this is a situation when we start thinking about buying inputs, we need to think about this. The next item we're going to talk about here is, I'll just punch it up real quick, currency impacts. And what I'm going to put up here, this is a chart of the US dollar index. And what this picture brings us, right now, this doesn't look like too big of a problem. The dollar index is moving up higher. We are seeing some trouble with the S&Ps today, and we are seeing a bit of a risk off. Again, I don't think this is a stock market major problem, but we're coming up on option expiration tomorrow in the S&P 500, and we're also coming up on the futures expiration, a thing called quadruple witching. And leading up to every option expiration for the last 7 months, the market has taken a nosedive and in turn has come back and bounced subsequently. A lot of this is due to option trading and the fact that option trading has exploded to levels unimaginable over the last year in the stock market, and this is affecting prices around this. So I don't think we're in for a major problem here, at least just yet. But when we see risk-off behavior, we see the dollar index begin to move higher as people move into more secure items and want to get rid of foreign currency positions. Now, this bigger chart shows how high the dollar can go, and we're not going back very far in history here. We're going back to back in the late 2019. And as you can see here, we're starting to do a little bit better, and we're seeing a case of higher lows, which is an indication of some bullishness. And if we see this move higher, this can create potential headwinds moving forward for U.S. exports. And this is something, again, we're not at a problem area yet. It's kind of like when you see a tropical wave develop, off the coast of Africa. Is it going to become a hurricane? Well, it could. It might not. But again, we are probably going to see things transitioning a little bit. Next thing we're going to talk about here very quickly is interest rates. And we're going to take a look at where the 10-year yield is. Right now, my opinion of the Fed, and this is generally shared, actually, I'm creating a little intellectual property procurement there. This is actually where JP Morgan stands on it, is that they expect interest rates to stay pretty much in a window between 118 and 150 on 10-year yields for at least the next quarter. After that, ideas are that interest rates will move up, assuming we get past the COVID problems and the Fed is forced to tighten. And as you can see here, interest rates have been fairly stable, and so far we have stayed in that window and we haven't really pushed higher. But if we see where interest rates are pre-pandemic, the story gets very different. We move up, we're getting close to 2%. As you can see, interest rates were generally moving lower. If we see, certain spending bills and certain things go on, we could see these interest rates move up. Why this matters? One, it increases your lending costs, obviously. The second thing is currency markets are a function largely of interest rates and growth. Just because interest rates are going up doesn't mean growth is going to be curtailed. And again, if we see GDP ideas through 2022, where we see continued elevated GDP as we begin to see the economy recover, and as we see this economic realignment that's going on because of the pandemic, we could see interest rates move up materially, and that could create a further headwind for commodities in general.
Sterling, I want to jump in and ask a quick question here. Different segments of the market kind of like cash price versus futures price, right? When it comes to farmers, we've seen ag rates tick up probably a little bit more than what your chart would show in general over the last 6 months. I don't want to quote any rates out there, but maybe as much as 0.75% higher on something fixed when it comes to land over a longer period of time. Why sometimes is there a separation between what we see in our interest rates, whether it's an operating line or a mortgage, and the general trend overall?
Okay, when you price in a mortgage, when you price in any sort of lending operation, you have to price in risk and you have to price in market volatility. So when we begin to see a 10-year yield on the U.S. is something that was considered nearly risk-free, meaning you buy this, it's viewed that you're going to have 100% certainty that you're going to collect this rate of return, the price you buy those bonds, and that nothing is going to deviate from that, and your capital is going to come back to you. When you have to price in risk, you have to add it into the interest rate. So, for example, if we begin to see land values move up, or we begin to see signs that there may be a bubble, this lender will feel that they have, increased global macro, increased wider risk to that particular item, and that will cause interest rates for that specific item to move higher. So, for example, if we begin to see housing prices move up and we see another wave of housing prices go up, you can expect probably to pay a little bit more for that mortgage, as it's a natural function of the market to try and ease demand. And when we see this with agricultural situations, what those lenders are looking at, they're saying they're seeing risk. They're seeing risk to price. They may be seeing risk to profitability, and they have to price in that risk into that loan to recover for potential losses.
Yeah, and on a different note, and I don't want to get you off trail and go too far off, but as we talk about interest rates, we think about where we lock in interest rates as farmers. We lock them in on operating lines. We lock them in on land purchases. Monday, we saw, I can't remember if it was a bill passed or introduced, but it will likely get passed, of a increase in capital gains tax. I believe from 20 to 25%. Can that impact? Do you think they'll have much impact in ag rates at all? Is something like that a factor, like you're talking about, or a variable that can impact one segment and not another?
I don't think necessarily an increase in capital gains taxes is something that could be a specific problem directly to agricultural prices. Where that could be, it could change how people govern themselves in the stock market, and that in turn could have a positive or a negative effect on interest rates. When you look at capital gains taxes, there's two kinds of taxes. There's a long-term capital gains tax and a short-term capital gains tax. The average holding time of 100 shares of stock on the New York Stock Exchange is how long, Brooks? How long do you think, when somebody goes out and they buy 100 shares of IBM, how long do you think they hold that stock for?
So I'm going to give you a complete swag, all right? I'm going to guess 36 months.
Try less than 36 seconds.
Oh, my goodness. Wow.
Most of the activity we see day to day in the stock market is machine-driven trading that trades on incredibly short time frames. I'm talking under 15 or 20 seconds. They're out here, they're trying to get just a few cents, maybe even a fraction of a cent, out of these shares that quickly, and they are in and out. It's called high-frequency trading, and that dominates the amount of volume that goes on in the stock market on a day-to-day basis. So those capital gains taxes are being directed directly at that group. If you're a regular investor and you buy, whatever company, let's say Apple Computer, most likely you're probably going to be holding that until your view of that company changes. Or if you're a portfolio manager, if your view on Apple changes, you're going to want to tax that. Along with that, I talked about the proliferation in options trading. I looked yesterday just at Apple Computers alone. The volume is up multiples from where it was 2 years ago. talking about nearly 1 billion shares in options just in near term. All of that option trading inherently is short-term capital gains. So once again, that is going to be the area that's going to be affected. Most likely, it will probably decrease on balance day-to-day volatility, but at the end of the day, it is not going to matter that much in terms of moving interest rates and sending anything else back through the much broader economic system. Now, if you look at land values and things like that, maybe that could sow some sales. That might work as a very small pressure on prices. But again, you're not day trading farmland at all. And we have to keep in mind the buyer of the farmland now, especially around here, is much different than what it was before. So I don't think that's going to be too big of a risk.
Hey, Sterling, we've had a question come in. I wanted to go ahead and ask this real quick. I just didn't want us to miss it. On natural gas, will the Gulf getting back into business help bring this down as the largest plant went down during the storm? Or will that lost production back us up?
What I think we're going to see, there are definitely supply problems and there are issues throughout Europe. As we see the Gulf come back into line and we begin to see production, I think that will work to stabilize prices. I don't think, meaning we've moved to a new elevated level. We may not go from right now, we're on the 5th floor, we may not go to the 7th floor, but that elevator might be stuck between the 4th floor and the 6th floor for an extended period of time.
That's the only question we've had come in so far. Please be sure to put those questions in the chat box. Be happy to answer those as they come in.
Sterling, you've hit a lot of high points, and I think that a lot of times we forget that there's a lot more that goes into the marketplace than just the fundamental news that we see every day on corn, soybeans, and wheat. A lot of things to think about. I think probably the most important thing that kind of differentiates these kind of talks from other marketing talks are you can take this information, and it's good to know, right? It's all good stuff to know, but how do we really apply? How does it really affect us? And we're coming into a time of the year, and we're going to try to concentrate on this in October and November, where farmers are going to have to spend a fair amount of money for tax situations. And probably in some cases, in at least Mike, in the southern corn belt, and I kind of put you on that midline south of there where yields have been really, really good. Traditionally, we've gone to fertilizer, we've gone to prepay chemical, maybe prepay some seed. We bought some equipment out there. We're going to have to keep our eyes open on any changes to tax codes out there. There's actually been one that would be a bullish factor on land when it comes to a like-kind exchange from LLCs and corporations, things like that. We'll talk about that in October. But really, I think that we got to take this information and make good decisions over the next 90 days. And they may have to be slightly different decisions than we've made in the past. Also, we may have to look at how we market the crop just a little bit different than we have in the past. I know November, December is pretty early for a lot of people to make marketing decisions. When we're stepping out there and we're buying fertilizer at 100% increase versus last year, we're seeing an uptick in seed, maybe 7 to 8%. Chemicals, a little bit tougher to get than they were a year ago. Prices are a little higher there. We really have to kind of weigh all these things to make some pretty good decisions. So what Sterling's bringing us, we may not consider being the primary driver in prices, but there's certainly drivers in our overall business. Looks like you've got some pretty good data on fertilizer.
Absolutely, and this is a chart of DAP prices for the Gulf. And as you can see, prices have moved decidedly higher. And this is not just the recent run-up in natural gas. This is a generalized run-up, and I think we're going to be looking at increased prices being a fact of life, at least for the near term. And part of this is, one, that we're going to be planting a lot of acres down in Brazil. In fact, pretty much any piece of farmland I think that can be planted is going to get planted something on. And that naturally comes back in to the fertilizer market. Along with this, we have to think about transportation issues. We've had trouble moving things from, I still have some chairs that I bought almost a year ago, and they're still not here. And that's just one small example of moving things and where we may have some transportation problems that come in here that end up pushing prices higher. So this is a situation where you've got risk, and it's something we have to think about on an individual basis. But you do have the risk, while prices are elevated, you do certainly have a risk of them moving higher from where they are.
Well, good stuff. Good stuff. Well, I know we've been at it here for an hour and 8 minutes, and we could probably go on for another hour and 8 minutes and not even scratch the surface. But hopefully, we've given some food for thought. To kind of recap things. We talked a little bit about the old crop impact, the new crop impact today. Old crop impact, certainly what's going on down in the Gulf. The good news is, outside of this little blip, 4 to 5 weeks, folks are still pretty bullish on those Gulf numbers and overall demand. Mike didn't paint us a very good picture. Charlie, I think, was hoping for that rain event across the country that might slow harvest a little bit, and it certainly didn't look like that was in the cards for us. Switching over to sterling, you could kind of pick your bullishness or bearishness based on what sterling is saying, but I read sterling pretty well over the course of a few months, sterling, and that bullish sterling that we had 3 months ago looks like maybe you're starting to wane a little bit now. And if you tune into the WASDE 360s, this guy's 3 for 3. Okay, he's 3 for 3 on reaction from the market. So he's got to keep that streak alive. But I'm starting to see just a smidgen of realism or maybe pessimism slip into some of your diatribes, Sterling. What do you think?
It's not pessimism. It is, the wake-up call occurred when CONAB put out their estimates for next year's soybean and corn crops, particularly that corn crop. That woke the market up to the reality that, no, we had a materially short South American corn crop, and that made a major difference in our prices. And if we have production return to normal there, this is going to have a material effect on grain prices. Right now, balance sheets for everyone from the U.S. consumer are generally pretty flush. Are farmers going to be aggressive in the United States about planting next year? Most likely they are, because they almost always are. And if we see that, we could look at that balance sheet loosening up noticeably if we don't have a problem when we're having this conversation in June of next year, when we start to see how many acres and everything that went in. There's a lot of things that can go wrong that can help protect prices. However, we're going to need a lot of them to actually happen. Otherwise, we're going to have a situation where that fund buying that really supports the market, we've seen that continually and steadily leak off for corn and soybeans. And if they are not inclined to buy, prices will naturally continue to drift and leak lower. We had a little better technical point. Market bounced for 2 days. And if we take a look at where corn prices are right now, I was hoping we'd have a hat trick today, as Christy saw in my tweet this morning. We're down 3 cents.
We're trying.
We were trying overnight, and then the market slips. And something to keep in mind about bear markets and bull markets, and this is true for the stock market, this is true for anything you trade. Bull markets start the day sloppy, kind of weak, and move higher through the balance of the day as people come in and buy it. Bear markets tend to start the day higher and tend to trail lower as the day goes on. And we're seeing that corn was a perfect picture of that. We had optimistic buying come in overnight from overseas, and it pushed the futures up to basically a 1 week high. What's happening now? We're beginning to leak back lower. Second thing that I want you to look at on this chart here, and this is this is going to be, this is important for what these funds are doing right now, and depending on how they behave. And if we look at here, let me see. If we look at this area, I'm going to underline it right here. See this area? Right around maybe just below $5. That's major, major support for the corn market, and we've held it several times. When we broke through it, we moved higher. If we start to leak below that, funds are not going to be making money on any of their positions. They're going to be underwater. And we're getting into that third quarter, fourth quarter of the year. Bonuses get paid. Fund managers don't like losing money in December. They will be quick at temper to cut losses, especially from a weakening corn market, if the South American weather situation turns to where we are going to see bigger production. And that could bring in some very acute selling pressure, and it will certainly take away any ideas about fund buying. And this is only for corn and soybeans. I have a different opinion on cotton still, but for corn and soybeans, we are going to be very, very dependent on, first, South American weather, second, any blinks in demand in corn from China.
So Sterling, if we take one thing out of this, and I know it sounds sometimes like we speak out of both sides of our mouth. We're a little bit pessimistic price unless we see something go on in South America. Here's some food for thought. This is something that our producers need to hear, especially when it comes to locking in inputs for next year. We have been pretty big proponents over the last 6 to 8 months for using options and derivatives with hedges. We've also been proponents of spreading out these hedges over time. We kind of wanted to have something to sell every week across the board, and it accelerates, especially if you're locking in a considerable number of your non-land inputs in November and December. Those sales and those hedges need to be accelerated. Where we slowed down a little bit last year, those sales need to be accelerated. You can still use some of these option plays. It's tougher right now because of time value, but as we get into November and December, we're still going to see some opportunities to use options. They're going to be a little different. There's some three-way plays on corn right now, which is something we looked at early on that we can start to watch. I'm not ready to pull the trigger on them yet, but November and December comes along. If our producers are locking in those costs, we have to increase the frequency of our hedges. And even if they don't, Sterling has painted an environment here that sure looks like the reward is for a little bit more aggressive hedging than what we took on last year.
I would completely agree, and we have to be nimble. We have to pay attention. The market gave us a pretty good little bounce here today. I mean, not compared to this and all this, that was great. But what we did have here, we had a low at $5, and now we're back up to $5.30. That's 30 cents. And most likely, if we don't have those South American weather breakdowns or something else to really create a rejuvenated bull market, when you see a 35, 40 cent bounce in corn, be ready to pounce on it a little bit. Because even if we go down and prices move lower and we start trading eventually maybe with a 4 handle, there will be sharp spikes in here day to day, week to week, and we need to be cognizant of them and be ready to take advantage of them because it gets harder. It's easy when it's going up like this. But if we look back at the history of corn prices, this isn't normal, this is. And we need to be aware of that, and we need to be able to take advantage of it. And again, you have to be more aggressive, more nimble, and that means maybe adjusting your size a little bit and adjusting your time frame. And if anyone has questions about short-dated options, anything like that, I can certainly help you out with you.
Well, we're seeing some clues. If you tuned into that WASDE report last week, you saw us kind of I don't want to say the first time, but one of the few times over the last 12 months where we increased carryouts. We increased our estimates of carryouts. And I don't want anybody to be alarmed, but we didn't show the balance sheets today, or we really kind of run out of time here. But you can, for the first time in probably 13 months, start to see a way out of the supply dilemma. Now, like we talked about, things have to hit on all cylinders, average crops across the board. But, we can see a roadmap to a 2 billion bushel corn carryout again. And 2 billion is certainly not excessive, but the market feels very, very comfortable at that level, which illustrates, which is perfect with what you just showed there, Sterling, almost a market at equilibrium there long term before you get into the volatility of the last 14 months. So we can start to paint that picture. We got a lot of hurdles to jump in front of us, but it's realistic to think in the next 24 months that we're showing some carryouts on corn near 2 billion, some beans maybe up there around 350, 400 million. So we've got to be cautious, and I think we've got to be a little bit more aggressive over the next 6 months than we have been over the last 12.
I would completely agree with that, because we have to get over hurdles. But really, if we just see Brazil's weather and Argentina's weather return to normal, I can put together a balance sheet for 2022 right now, and I would be nervous about it. Because hitting that 2 billion number, certainly not out of the question, because once you lift that Chinese export number and that comes back down, maybe the rest of the world will pick it up. Maybe. Kind of depends on how things work out. But certainly a potential for a return to that level of number is a distinct possibility.
All right. Well, Christy, we have had an attentive audience for an hour and 20 minutes. I don't think anybody has dropped off the call, which makes me feel pretty good about what we've covered. And if you want to further these conversations, you know where to go. We've got the marketing info email out there. You're more than welcome to shoot me an email or give me a call. We would love to talk to you, and Sterling and Mike as well. So, Christy, I'm going to give it to you to turn it over and take us away today.
Yes, all I can think is I feel like I was overloaded with information, but it was also good, from Charlie to Mike to you to Sterling leading us there at the end. It was just really, really great information. So if you happen to have any questions, please feel free to send those to us at marketinginfo@sompointernational.com. Right now, you can see that's at the bottom of your screen. And this is our virtual crop tour. So we want to remind you that is still going on. We are taking this into some harvest time just to kind of see how things are finishing out with the season. And with that, I do want to remind you that farmers are in the field. So please be safe out there as you're going about traveling. Make sure you're mindful of the farm machinery that's moving. And also want to remind you that coming up next month, we have two big events. One, on October 12th, we have our WASDE report, and we should have those registration details in an upcoming DMO. We also have next month our third Thursday, which we already kind of gave you a bit of a teaser about that. We know we're wanting to talk a little bit about how these natural gas prices are going to affect your fertilizer prices. So make sure that you register for that and spread the word. We want people to be here so they can hear that. Everybody can take advantage of the information that Brooks and Sterling have to offer. Also want to remind you that you can sign up to receive these services. We have a market call that goes out every day. We have our daily market outlook email, and that is generally every day, but there are a few days that we miss. We have our third Thursdays every Friday. Sterling has a Friday afternoon marketing club that kind of gives you a recap of the week and leads you into some other things to think about for the weekend. We also have a daily livestock report. Well, again, we are just so excited that you were able to join us today. This has been recorded and it will be available in an upcoming DMO. Or again, you can email us at marketinginfo@sompointernational.com and we'll be happy to help you get a copy to this link. All right, guys, any parting words? We're good?
Good.
I'm good.
All right. Well, thank you all again and have a wonderful, wonderful day.